Don't let a crisis go to waste. In this video, I am going to share with you the no BS strategy to profit from global crisis. Also, as a bonus, I am going to share with you my top 7 picks of high-growth stocks that will do well regardless of global macro environment. Welcome to the Investment Diary. This isn't just theory, this is my diary. Today, we address a critical aspect of portfolio management, one frequently underestimated during periods of global instability. Over the past 3 decades, the world has experienced 70 distinct conflicts. A consistent pattern observed across all these events is the ability of astute investors to identify and capitalize on significant financial opportunities. A core principle of sound investing dictates that one should never permit a major crisis to pass without thoroughly exploring its potential. While armed conflict is undoubtedly tragic, it remains a recurring element of the global landscape. As investors, our most prudent course of action involves adapting, optimizing our portfolios, and strategically navigating prevailing conditions to generate returns. I will also highlight the 7 specific stocks I believe are well positioned for substantial profitability in the current global environment. My approach involves identifying plausible scenarios, analyzing their potential market impacts, and formulating a robust investment plan designed to yield returns regardless of the outcome. This includes revealing the 7 stocks I anticipate will perform exceptionally well. Notably, these are not the conventional defense or energy sector plays. Truly sophisticated and successful investors often employ a distinct, less obvious strategy. Currently, we observe the unfolding conflict between Iran and Israel. My objective is not political commentary, but rather to focus on the investment implications. To date, this situation has not escalated into a global catastrophe or a World War III scenario. The market's response has been remarkably subdued. Crude oil is up a modest 5%, the S&P 500 remains relatively flat, and gold is down 2%. The market largely appears to be discounting the situation, a stance I believe may be ill. While containment is possible, an escalation would present a significant opportunity, which I will explain further. Since 2009, despite numerous negative, chaotic, and adverse global events, the S&P 500 has consistently maintained an upward trajectory. Wars, periods of instability, pandemics, and economic contractions are inherent to the S&P 500's operational environment. Its long-term trend remains upward. A common misconception is to simply disregard all market fluctuations. This is incorrect. We must agree on a fundamental principle. Maintaining a full cash position, particularly when market anxiety leads some to advocate for liquidating assets due to fears of economic collapse, is frequently detrimental. While saving money will incrementally increase capital over time, investing, when combined with a sufficient time horizon, leads to significantly greater wealth accumulation due to the power of compound interest. Recall those 70 conflicts over the past 3 decades. During these periods, a straightforward investment in the S&P 500 would have yielded a 7x return. Historical data demonstrates that adverse global events and periods of global unrest do not typically impact the market's long-term trajectory. While short-term fluctuations and volatility are inevitable, maintaining a consistent investment position over the past 3 decades, whether in the S&P, Nasdaq, or individual equities, would have resulted in substantial gains. Geopolitical events characteristically generate significant short-term market noise. When tensions escalate, considerable uncertainty enters the market, prompting it to price in additional risks, regardless of immediate likelihood. This often leads to a short-term market downturn, a typical response to geopolitical developments. As expected, oil and defense stocks frequently experience immediate spikes, particularly during Middle Eastern conflicts. However, this short-term trend typically does not persist. Any immediate trading opportunities in these sectors were likely fleeting. Conversely, technology stocks often experience initial declines followed by robust recoveries. Tech is frequently the first sector impacted by uncertainty, as these beta stocks are more sensitive to market movements. However, they also demonstrate superior recovery rates. While a simplistic conclusion might be to just buy tech for wealth, a nuanced understanding is crucial. Unless we are facing a full-scale World War III scenario, a remote possibility when discussing Middle Eastern dynamics and the involvement of major global powers, equity markets generally remain resilient. Long-term historical statistics corroborate this. Should we truly be headed for a societal collapse or a World War III event, your equity portfolio would be the least of your concerns. Basic survival would become paramount. I believe such an extreme outcome is unlikely, given historical precedents and the global reluctance to engage in mutually assured destruction. I identified 3, potentially 3.5, probable scenarios for the ongoing Iran-Israel situation. Fast resolution. This reflects the market's current valuation. A rapid diplomatic resolution would likely see the market continue its current trajectory, largely disregarding the event. Medium-term tensions. Should the situation escalate beyond its current state but remain below full-scale conflict, the market would likely experience a correction, presenting a moderate buy-the-dip opportunity. Strait of Hormuz blockade. This is the scenario with the most profound market implications. If Iran blocks the Strait of Hormuz, which accounts for 20% of global oil transit, crude oil prices could surge significantly. This would almost certainly trigger a short-term market sell. Defensive sectors like consumer staples, healthcare, and telecommunications could decline substantially. The S&P 500 might fall 30 to 40%, the Nasdaq 40 to 50%, and technology growth stocks a staggering 50 to 70% or more. Highly exposed tech stocks like Palantir, Tesla, and Nvidia would experience severe damage. This scenario is currently not priced into the market at all, creating a massive opportunity. Within the Hormuz blockade scenario, it is uncertain whether it would lead to a full-blown recession or merely significant market volatility without a recession. Regardless, the underlying investment opportunity persists. Here's the thing. The world's most successful investors do not engage in gambling. They prepare. Regardless of which scenario materializes, we have a clear plan to generate substantial profits. We understand that bull markets typically last approximately 5 years, while bear markets average around 10 months. Historically, every red bear market has represented a significant, albeit often overlooked, opportunity for wealth creation for long-term investors. If we enter a scenario 3 environment, whether it involves a recession or not, we will experience one of these significant downturns. The greater the market decline, the more substantial the opportunity for long-term investors to acquire high-quality stocks at reduced valuations, provided they are prepared to tolerate short-term volatility. This approach is distinct from speculative trading. For those who have followed this detailed analysis, I am now pleased to share the 7 top companies I have identified for long-term growth and resilience during uncertain times. Microsoft, Alphabet, Amazon, Meta, Nvidia, Palantir, Tesla. These 7 technology leaders, Nvidia, Microsoft, Alphabet, Amazon, Meta, and Tesla, represent, in my view, the premier investment opportunities based on my rigorous evaluation. Should these companies experience significant temporary dips due to geopolitical disruptions, particularly if those disruptions intensify, the resulting price drops would allow long-term investors to acquire these exceptional stocks at more favorable valuations, provided they are prepared to navigate short-term volatility. Now, it's your turn. What adjustments are you making to your portfolio amidst these current uncertainties, or are you awaiting clearer signals before your next moves? Share your insights in the comments below. I value every perspective. If this deep dive proved insightful, please like and subscribe to the Investment Diary for more data-driven market analysis. Thank you for watching. I'll see you in the next diary entry.